Hi guys, welcome to part 2 of mutual funds. We will discuss in depth about what a fund is exactly and how it operates. Okay, it's going to be a very interesting topic here. So let's get started. Now, firstly, let's look at one particular fund and focus on how it works. For this presentation, I have chosen SBI Blue Chip Fund. Okay. Now, from the stock market jargon, blue chip companies are those which have a high rate of risk associated with them. However, they also have a high rate of return associated with them as well. Okay, remember when you refer to something which is called blue chip, it means that the company is risky and also the returns on this company is in fact very good. The common fundamentals of the stock market are that if you have a stock which is in fact risky, it is having a good chance that you could get a very good rate of return despite it being risky. Okay, risky, higher the risk, higher the chances of return, also higher the chances of loss as well. Weird, I know, but that's how the market works. Okay, now let me just talk about that particular section where I mentioned about the fund. SBI Blue Chip Fund is a large cap fund with a flexibility to invest up to 20% in mid cap stocks. What is the meaning of large cap? Now, in order to understand what is the meaning of large cap, you need to understand what is the meaning of market capitalization. Market capitalization means the total number of shares multiplied by the price of every share. Okay. The total number of shares multiplied by the price of every share. Now, if a company were to have, say, 5 lakh shares of rupees 300 each, their market capitalization will be 5 lakhs multiplied by rupees 300. So that's what you refer to as market capitalization. If a company's market capitalization is greater than 550 crores, it is categorized as a large cap company. However, in order to be considered as a mid-cap company, their market capitalization should be anywhere between 150 crores to 550 crores. Remember, more than 550, large cap, 150 to 550, you call it as mid-cap. Anything below that, you call it as a small cap company. Okay. Now, what is the advantage of investing in something which is called as a mid-cap company? Mid-cap companies are believed to have greater chances of growth. Mid-cap means that they're still young. The company has a lot of opportunities which they are yet to come across, and they have yet to exploit a lot of their businesses, and therefore they have a greater chance of growth. Large cap companies, on the other hand, most of them have in fact reached a case of saturation. Most of the large cap companies you've come across haven't really made anything innovative in a very, very long time. If I were to consider large companies, large cap companies, for example, like ICICI Bank or even State Bank of India, or even technology companies like Infosys or TCS, they haven't come out with anything remarkable, anything outstandingly innovative, which has resulted the company to shoot up their profits. They are more or less in their saturation, you could say. Okay, the portfolio largely follows a bottom-up strategy combined with a view on change in sector dynamics, which would lead to sector overweight or underweight decisions. Now, the mutual fund manager, I'll tell you what they do in some time, gets information on if a security is overweight or if a security is underweight. If a security is overweight, the mutual fund manager buys more of that particular security. The analyst considers a security as overweight when it's going to give you, or when the chances of it giving you greater returns are more. A security is considered underweight when the returns expected on that security in fact declines. For example, if I was a mutual fund manager and I have stocks of Ranbaxy, my analyst would give me information saying that Ranbaxy has become underweight. Why has it become underweight? if you come across the recent case of Ranbaxy, where their drugs were banned in America, the company's profits are expected to decline. When the company's profits are expected to decline, my investment in the company, my value of investment in the company is also going to decline. So therefore, the security gets classified as underweight, and I'm going to go about selling my security and buy something else. Overweight means the stock is going to do well. So when it's going to do well, let me take the greater benefit of it and buy more securities of that particular company. Okay. Now, if I were to come across information that Reddy Laboratories, another pharmaceutical company, has had a drug approved in the American market. Now that's very good news. The company's profit is going to go up. So the share price of this company is also going to go up. So good returns for me. Let me buy more shares of this company. In that case, you call it as underweight. Call it as overweight. Okay. The focus on generating alpha by better stock selection within the sector. Alpha comes in stock market analysis, alpha, beta, and capital. There is a lot of concepts when it comes to stock market analysis. Alpha, beta, gamma, delta, rho, vega is also there. I'll do that in another video because they're way too lengthy, and I require a board to explain all that. Okay. The investment strategy of the portfolio is to identify and invest in businesses and management who tend to consistently perform in terms of growth. There is some more text that is missing there, but what they refer to here is the mutual fund here will buy stocks of companies which are consistent in their growth. Now, a lot of companies are consistent in their growth, meaning last year they declared good profits, this year also they'll declare good profits, and year on year they've been declaring good profits. Very rarely do you actually see these companies do badly. Okay. Now the only exception, for example, for Infosys was the 2013 results that they showed. That was pretty bad compared to the company's history. Never has the company actually shown such miserable performance due to a bad economy. Now in that case, the performance of the company has been affected. But if you look at the history of the company in terms of its performance, revenue, profit, all that, they have been doing quite well. So this mutual fund chooses to invest in such companies which are in fact consistently doing well. Now if you look at the other side there, where I'm given a fund style, they've given a small matrix there. There in that matrix you can see in the top one, growth, blend and value. Below that you can see large, mid and small. That's market capitalization. Investment style here is a blend of growth and value. Value here means if you want to buy these companies who are in the large cap category, the cost of buying their shares is quite high. Okay, remember the cost of buying these shares is quite high. You could buy these shares for like 2,000, 3,000 rupees for just one unit of the company share, just one unit. Okay. Now buying one unit doesn't really make any give you any good returns. So what happens here is even though you're not buying them individually in just one or two units, the mutual fund company is able to buy them in large quantities and give you the benefits of investing despite the cost of investment being quite high. Okay. Below that you have the fund details, that is when the fund was created, 2006 February. It is an open-ended scheme. An open-ended scheme means anyone can invest in the scheme. There is no maturity time. Some schemes are considered close-ended. You would get advertisements in the paper saying that this company is inviting you to invest money in a close-ended scheme. Today you can start investing say on the 7th of February and will accept investments all the way till the 20th of February. If I want to invest on the 21st of Feb, one day after the date of investing, I won't be able to. In a close-ended scheme, new investors are not encouraged. In an open-ended scheme, anyone is encouraged. Okay. Then the benchmark. Okay. Benchmark here refers to Standard & Poor Bombay Stock Exchange 100 index. Now the stock exchange consists of various indices. Sensex is an example of an index. Okay, Sensex is an example of an index of Bombay Stock Exchange. Nifty is an example of an index that is there in National Stock Exchange. Okay, don't worry about it. I'll do another video on the various stock indices that are there. They are in fact extremely interesting. So Standard & Poor is the company that has designed this index. Okay, in order to design an index, you require the assistance of a analyst company. S&P is one of the major analyst companies in the world. So they have in fact designed this index. Okay, then minimum investment. If I'm a new investor, minimum amount of money I need to invest is 5,000 at one go. Later on, if I feel that I want to buy more of this particular investment fund, this particular mutual fund, I can go about investing 1,000 rupees onwards after I've invested an initial amount of 5,000. Okay, the load structure. Previously, mutual fund schemes had an entry load and an exit load. The reason they did that was because the cost of running a mutual fund was quite expensive, and what they would do was they would ask you to pay a small fee as a way in which they could make up their costs. If you wanted to invest in a mutual fund as a new investor, you'd have to pay an entry load. Let's say you want to pull out your investment after some time, they would charge you an exit load. In this case, there is no entry load, nor is there an exit load. So your investment is safe. Okay. Then you have plans available, regular and direct. I'm not sure what this means exactly. If I find out more information on this, I'll definitely let you know about it. Options here, you have growth and dividend. Now, growth option here means your investment will appreciate in terms of value, meaning let's say you invested 5,000 rupees. Over a year, 5,000 rupees could become say 5,200 or 5,300. Okay, and the money is given back to you afterwards. Dividend here means if the companies go about giving dividend, the dividend amount is in turn used to buy more units of the mutual fund. Okay, so you need not invest anything more. The additional bonuses which the company give you, okay, using that money you could buy more units of the mutual fund. Moving on. Why do we need a mutual fund manager? In fact, this particular mutual fund is the SBI Blue Chip Fund. In fact, has been headed by this lady by name Miss Sohini. I hope I'm pronouncing her name right. Miss Sohini joined SBI Fund Management Private Limited as the head of research on October 2007. Now, a mutual fund manager is required because when you have traders who are buying and selling securities of various companies, they need to have someone who can guide them in order to what securities they're supposed to buy in order to meet the objective of that mutual fund. All funds have got one particular objective or the other. I've chosen here SBI Blue Chip Fund. It's an equity-based scheme. All equity-based schemes, their objective is to increase the value of your investment. That is, they aim for very high returns. When they want to aim for high returns, the traders of this particular mutual fund are in fact very aggressive in the way in which they trade. So these guys need to be told what shares they're supposed to buy, what shares are good, what shares are bad, what is the allocation of resources they're supposed to put in, all that. Okay. And as you can see in the end, I mentioned once upon a time in one of my classes in the evening college that as a chartered accountant, you can even take up the job as a mutual fund manager. And as you can see here, Ms. Sohini happens to be a chartered accountant as well. Okay. Now moving on. How does the fund manager, operate? Now here, this report has been prepared as of the 31st of December 2013. Now, as of that particular date, the mutual fund comprised of these sectors of investments, meaning 5.16% of my investment has been in the telecom sector. Let's say I as an investor have put in just that minimum 5,000 rupees. In that 5,000 rupees, 5.16% has been used in order to buy telecom shares. Okay. The major investment that you can see there would be the financial services. Okay, 20.23%. Financial services here comprises of banks and non-banking financial companies as well. Okay, so banks are usually considered to be an evergreen security, meaning you rarely see banks perform quite badly. At least I haven't, with the exception of SBI once upon a time, but not really do you find banks performing badly all the time. Okay, you've seen metals at just 1.63%. Okay, other companies where the investment has been extremely low, like for example, you have chemicals, 0.88%. Then other companies, like in the case of construction, 3.44%. These companies which I mentioned, metals and construction, one of the reasons why that investment is so low is because these are not well-to-do companies. Most of the construction companies, take for example DLF, is severely in debt, and they have a large amount of inventory which are unsold. Inventory, I mean here, is the real estate that they have put up. A large part of their real estate continues to remain unsold. DLF alone is in upwards of 20,000 crores in debt. So you can imagine, if I was an investor, I would really think twice before I put my money in a company like DLF, or at least I would make sure that it's not a major chunk of my investment. Other things that you can come across there, you notice large investments have been made in the service sector, like banking. I mentioned large investments, even for example IT. Okay, information technology also a big sector. Other sectors where big investments have been made: pharmaceuticals. Pharmaceuticals are also a fairly evergreen industry, because who stops buying medicines? So it's always going to do well. Automobiles, no matter how high the interest rates are for a vehicle loan, that will not stop an Indian from buying a car. Okay, or no matter how silly automobile has been launched in this country, you still have people who are ready to buy it. In my opinion, I wouldn't really buy a car which is called Duster. It sounds a little ridiculous, in fact. So all these sectors are in fact doing well. Moving on. Now the mutual fund manager would also in fact look at how are the assets allotted. As you can see there, the major chunk of the investment has been in large cap companies. Okay, small percentage, just about 16%, has been in mid cap, while others has been in cash. Okay, cash here refers to a bank investment, could be a fixed deposit, could be just savings account. That is what they refer to as a cash investment. Now the reason they do that here is because no one puts everything in one basket. Even I, being an investor, would never buy all. Using all my money, I would never buy just one company share. That's just stupid to do that. The reason they do this here is because if you just look at the cash part there, if I promise, okay, not really promise in this case, but just tell my investors, this mutual fund scheme is going to give you 15% as the rate of return. 15% as the rate of return. That's really good. Okay. 5% of that rate of return I can promise by investing in fixed deposits or a savings account. Okay, the remaining 10% I can focus on by investing in the share market. Now remember, right now in India the share market is not doing so well. At least it hasn't in the month of February or in the last week of Jan. We started off with a bang, in fact, in the share market, but right now it's not doing so well. If this were to continue, I couldn't even promise my investors 15%. I would gradually have to reduce it to say 2-3% if the market continues to be badly performing. But I can give them a fairly good rate of return by investing by putting money in investments which are in fact safe. Okay, so that's what they've basically done here. Okay. Then, in what companies have they invested? Okay, in what companies have they invested? The percentage of total AUM. AUM here refers to assets under management. HDFC Bank, remember I told you that banking sector is doing very well. ITC, tobacco, who stopped smoking. I'm not sure what Motherson Sumi Systems Limited is. I find the company's name a little funny. Tata Consultancy, of course, IT, Infosys IT, ICICI Bank, banking again. Reliance Industries, manufacturing. Reliance is a conglomerate. So these guys are into everything. Bharti Airtel, service. Devis Laboratories, pharma. Housing Development Financial Corporation Limited. That's the parent company of HDFC Bank. They're mostly into home loans. So this is where the investment has been put in. Assets under management here refers to how much of the total value of the fund investment, where has the money actually been taken. Let's say this fund is worth 1000 crores. Okay, most mutual funds are like 2000, 3000 crores each. Okay, so if this is assuming just about 1000 crores, 7.09% has been, in fact, of that 1000 crores been used to buy shares of HDFC Bank Limited. Now this is what the fund manager does. It's not necessary that the things that you saw here before, in fact this asset allocation or sector breakdown, this is in fact going to be consistent. There is a good possibility that this will change. The fund manager is going to check, okay, telecom sector right now is doing bad, Airtel has declared bad profits, so let's no longer invest in telecom sector, let's do something else. Okay, they will continuously keep changing this. Okay, they'll continuously keep changing this. If you remember the first slide, there is in fact a provision of mid-cap securities to be up to 20%. Right now it's just 16%. If they find that large cap companies are doing bad, the mutual fund manager can very well say, okay, let's cut back on large cap companies, let's invest more in mid cap companies, and 16% could well touch to 20%. So this is what could happen when it comes to the mutual fund managers working. Remember, this involves a great deal of technical analysis. It involves continuously looking at the market, continuously looking at reports submitted by research companies, regularly evaluating your portfolio, and then finally making the changes which are required. Okay, I hope this video was helpful. If you have any queries, do leave them in the comment section below. I will be making another video on mutual funds, especially the returns part, how are they calculated, all that. Okay, so thank you for your time. Have a nice day, and please do subscribe to my videos. Thank you.